A very good morning, good afternoon, good evening, and a warm welcome to members and stakeholders participating in this webinar. I'm Ghiaz, and I'm the Senior Policy Manager for Digital
Soy el gerente
and I will be your MC.
Et je vais être votre...
Warm welcome also to Dr. Alfred Hannig, Executive Director of the Alliance for Financial Inclusion, for taking time to participate in the webinar. As we kick off, please allow me to recognize the presence of leaders from the network who are either speaking or participating in this webinar. First is Dr. Margarita Hernández, Superintendencia de Economía Popular y Solidaria, Ecuador. John Mwaka, he is the Chief Executive Officer, Sacro Societies Regulatory Authority, SASRA, Kenya. And Mr. Edgar Judy, member of the board, Bank de la République, Haiti. So this is the second session of the webinar on microfinance response and recovery from COVID-19 regulatory and industry perspective. Today's webinar will be moderated by Madhurantika Maulik. She's the head of capacity building of at Alliance for Financial Inclusion. So without further ado, let me invite Dr. Alfred Hannig, AFI Executive Director, to deliver the opening remarks. Over to you, Alfred. Thank you so much.
Yes, good afternoon and good morning to Latin America, and of course, good evening to all other participants on the other side of the globe. This is a real pleasure for me to be part of this, and I actually wanted to share this with you, of course, in the beginning, that this whole debate around microfinance and microfinance regulatory institutions, regulatory aspects and all that has kept me actually quite busy for quite a number of
Je suis très content.
Y veo con placer que
the AFI membership to have this webinar, especially now in the times of COVID-19. So warm greetings to all of you. Welcome to everyone. I really hope that all of you are safe and very good health as you are joining us for this webinar, Microfinance Response and Recovery from COVID-19. What is the regulator and what is the industry perspective? I wanted to recognize specifically a few of our high-level participants who are around the table. So first of all, I would like to welcome also Superintendent Margarita Hernández from the Superintendencia de la Economía Popular y Solidaria de Ecuador, who has also taken time to take part in this webinar. And I was also made aware by my colleagues that we also have, I think, Mr. John Mwaka with us. From SACO, Societies Regulatory Authority, SASRA in Kenya. He's the Chief Executive Officer, and we also have Mr. Edgar Judy, the member of the board of the Bank de la République de Haiti, with us. So welcome you all, and of course welcome all other participants, members, partners, and friends. Now the webinar, I think, comes very timely, as you know, we have been talking a lot about opportunities of these crises or the crisis situations that we see at the moment, and we believe that here at AFI, I think we are going through quite systematically to identify these opportunities. So we are looking at issues around inclusive green finance, we're looking at issues around digital finance, we are looking at issues around gender inclusive finance. We also have looked into issues around the forcibly displaced persons and the youth, financial inclusion in youth. So there are many opportunities, and I think it's now really very timely to also look at what are the opportunities in microfinance these days. And I think this webinar indeed comes very timely to shed light onto this very important topic. For us, it is quite exciting to see now that we have so many participants. I think we have 143 working group members with us to attend this virtual meeting. And the total participants, according to the numbers that I have, stand currently at 212 for this webinar. And I think this really attests us the importance of AFI as a member-driven network committed to active engagements in advancing financial inclusion, policy and regulatory issues at national, regional, and also international levels through what we are, I think, very good at, which is the knowledge exchange, peer learning, and the technical interventions. So for me, this is quite surprising to see such a strong interest around this topic, and I'm actually very happy that we apparently made a good choice to bring this up. Ladies and gentlemen, the COVID-19 crisis, I think, has made us realize how important it is for all of us, individuals, businesses, regulators, policymakers, to adapt to the fast-changing scenarios. And in this webinar now, we will focus on the microfinance sector and how it can adapt and respond to the ongoing crisis. More importantly, we will definitely explore the role of regulators in engaging with and supporting microfinance institutions during these difficult times. The next point that I wanted to make is actually around this opportunity that I spoke about before. Microfinance has an opportunity because of the segments that the MFIs address. This is rural and urban poor, women, small informal businesses, and forcibly displaced persons as well, in conflict scenario. And MFIs are, as we see it, the financial frontliners of this crisis, the critical frontliners. And it is very important to safeguard as well our frontliners in order to mitigate the negative effects of the crisis among individuals, households, and small businesses. And I believe that MFIs are particularly well positioned in this regard, because we have also seen huge success stories in microfinance over many decades, even before the mainstream debate moved into financial inclusion. We have seen these examples from Latin America, from Africa, from parts of Asia, later also in the Eastern European, Caucasus, Central Asia region, and also in the Arab region. So this is a topic which is indeed now very and highly relevant for AFI. The numbers that we get are also very impressive. There are 140 million microfinance customers globally, with a loan portfolio of about 124 billion US dollars. And notably, 80% of these customers are women, and 65% are rural borrowers. So this is, I think, a strong manifestation why we think microfinance regulatory issues are important to us. Microfinance institutions also play an important role in providing credit to small businesses. For example, the IFC estimates that its microfinance investees have provided 45.4 billion US dollars in loans to MSMEs. And as you all know, while traditional financial service providers have often neglected women and women-owned MSMEs, microfinance institutions have deliberately targeted them, even exclusively in some cases. Now, dear participants, as we engage with microfinance institutions and stakeholders in this webinar, I will be keen to learn about how microfinance customers, this is both individuals and small businesses, are coping with the economic shocks emerging from the crisis. And we have actually heard, even from regulators in the past weeks, that there is quite a concern that it is especially the informal sectors that disproportionately affected customers who, from this crisis, who will suffer most, and of course, who we will have to have a special look at. So what I'm trying to say here is that the client perspective is very important to us. And another aspect in this regard is to delve into the point of informality. Are informal lenders, such as money lenders, pawnbrokers, and so forth, springing up, contributing to exclusion and leaving the customers susceptible to exploitation? So this is a question that, of course, we would like to shed some light onto the answers around this question. Now, the series of webinars that we have been going through, we have been having as an indication that COVID-19 is playing a strong role in driving further digitization and digital transformation. And of course, I would also encourage all of you just to ponder, to think about on ways to harness technology from MFI business model perspective and from the perspective of addressing client needs in a fair and empathetic manner. Further, I think we also encourage all of you to go beyond response and discuss about the recovery phase. Response is now, or was yesterday. It's about the immediate mitigation of the crisis, but the recovery phase has just begun. I think this health crisis brings us a great opportunity to think afresh from the perspective of working towards a more sustainable and green economy, as I have said at the beginning. So let's use these opportunities very actively. Finally, and most importantly, I think we want to express our hope that this webinar provides key actionable recommendations, so that this is a practical webinar to regulators, to policymakers within the AFI network to work closely with microfinance stakeholders to protect vulnerable segments of the society, such as women, small and informal businesses, and of course, the forcibly displaced. What we are saying here for microfinance is, I think, very much aligned with our commitment that we have launched at the last Global Policy Forum in Kigali in Rwanda, when we actually ended the forum with a commitment to leave no one behind. So in this regard, I would like to wish you very fruitful deliberations. Thank you very much, and have a good rest of the day. And of course, a great event. Thank you very much.
Thank you. Thank you so much, Alfred, for those insightful remarks and also for your overall guidance. So, colleagues, before handing over to Madhu, allow me to introduce the lineup of today's panelists. We have the first one is Dr. Margarita Hernández, Superintendent SEPS. Dr. Margarita is a doctor of jurisprudence and has various legal positions in the Superintendency of Banks. Second panelist to complete the regulatory representation is Mr. John Mwaka, CEO, SASRA Kenya. Mr. John Mwaka has over 20 years of experience in institutional development and is an expert in cooperative development, planning, and change management. From the implementer side, we have Andrée Simon. She's the President and Chief Executive Officer of FINCA Impact Finance, a global network of microfinance banks and institutions. And she's accompanied by Scott Graham, Director of Customer Research and Field Data Services at FINCA. We welcome you both. Last but not the least, we have Denise Diaz. She's the lead financial sector specialist at CGAP. Denise works primarily for the policy pillar at CGAP. She's specialized in the prudential and market conduct, financial regulation, and supervision. Again, thank you to the regulators, implementers, and stakeholders for agreeing to be part of this webinar. We look forward to a fruitful discussion that will take place today. So over to you, Madhu. All the best. Thank you.
Thank you, Gyas. Wish you all a very good day. It is indeed my honor to be moderating this panel discussion with the esteemed panelists that we have today with us. Before I turn to the panelists, let me have a word with the audience. In AFI, we talk always about the events being learning through sharing. And thus, we request all the participants today to participate actively for the next 1 hour or so by sharing your questions, your comments, your experiences in the chat window. The impact of the pandemic has been such that we are all affected by it globally in some way or the other, maybe as in our roles as professionals or maybe at a personal level. And thus, I think we have something to contribute to this discussion, all of us. And in an in-person event, I always say, oh, I need to hear the buzz in the room, the discussion, the sharing. And today, I want to see that buzz in the chat. So please feel free to please contribute, ask your questions, share your feedback. Feel free also to respond to some of the questions that your other colleagues would have mentioned. And with that note to the audience, I would start off with the discussion. The pandemic has, of course, which started off with a global health crisis, has brought with it also economic, social, and a humanitarian crisis, which is undoing the significant progress that we have made in the past decade. And this has not spared any economy, developed or developing. It has not spared an institution, big or small, or it has not spared individuals, rich or poor. But of course, those being disproportionately impacted are those who are from the low income earning population and the institutions that are serving them. So the objective of this panel discussion is to discuss how we as various stakeholders can collectively support the regulated microfinance sector. Though of course we do recognize the huge section that is serviced by the non-regulated institutions also, but we'll focus on the regulated microfinance sector, and together we address the challenges that the microfinance service providers and their customers are facing during the pandemic. And back to customers, two, how do we ensure sustainability and business continuity of microfinance institutions? And third, from the policy perspective, how we talk about response and recovery, what we have seen in the
Madhu, you're breaking up. Sorry.
Dr. Margarita, sorry about that. Dr. Margarita, were you able to hear me?
Yes, I hear you now.
Yes. So I was wondering if you could share with us what has been the challenges that you have seen in Ecuador and some of the policy interventions that your institution has taken up.
Thank you so much. Good morning and good evening to everyone. So COVID-19 has generated in the country an unprecedented economic crisis that affects men and women regardless of their age. We all can see the increased employment caused by the closing of companies and businesses. The provinces with the largest population in Ecuador have been the most affected by the COVID-19, registering the highest numbers of infected and death, which caused a very high economic impact and slow possibilities for reactivation. Furthermore, the increase in employment in the country has generated growth of informal commerce due to need to generate an income. And the main effects on the customers of the last mile of the small businesses are low liquidity, business closing, small companies paralyzed or operating at low levels, reducing workforce and growth of the informal market. To mitigate all these problems and the impact for COVID-19 and the economy, the people have chosen to prioritize spending, so reductions of consumption, increased saving for employment people, change in consumption habits and informal entrepreneurships, and the most important of all, change of working hours. So if we have to see that in the economic sectors, we have a lot of impact in transportation, commerce, tourism, and services. And the main measure that we implemented to help the microfinancial entities to work, to lead with all these problems are an extraordinary deferral of credit obligations to generate a relief in the credit payments. So new financial products are now to work with, and the opening of mobile services points to reduce the influence of vulnerable people who collect social help bonus. we work to implementation of virtual service channels, but not all the microfinancial institutions can do it. And they work to generate and help in another ways to the people who are with institutions. So they make donations of food kits on help for the people and generation and interpret courses of parents who lost the jobs. The important to this is when you see the extraordinary deferral of credit obligations is already applied to more than 700,000 credit operations with a total portfolio balance amount $6,119 million, that is more than 50% of all the credit portfolio of the microfinancial service institutions. Sorry, can you hear me?
Yes, we can.
Thank you so much.
Sorry. Thank you so much for those details. Indeed, really appreciative of the challenges that you're facing and the immediate response that you have been able to take with us. Maybe we now travel from Ecuador all the way to Kenya, and let's hear from SASRA, from John, on what has been the challenges that you have seen in Kenya, where I guess the situation is different, and what have been some of the immediate steps that you have been able to take in Kenya. Over to you, John.
Thank you so much, and hello to everybody. I hope you can hear me well.
Yes, we can.
Well, I think the impact that has been brought about by COVID-19 has been more or less the same globally. And the measures that have been taken by different governments, both national and whatever is structured, could they be provincial or otherwise, can be sort of related. But I think for those that are in upcoming economies, and especially south of Sahara, I think it's been a little bit more devastating, because some of the measures that have been taken by the national government have been a little bit tough, including lockdowns, night curfews, and so forth. But in terms of the impact that it has had on financial institutions, especially the credit unions, these are corporate financial institutions, it's been quite devastating. And the very beginning, actually what we noted, the onset of the crisis brought some shockwaves that impacted many sectors of the economy, and especially for the SACCOs, that is savings and credit cooperatives that as a SASRA we regulate, were affected mostly in the areas where we have what we call horticultural and agricultural areas, the issue of the question of public transport, which are offered by some of the members who belong to these cooperative financial institutions. They were adversely affected. And so we looked at the impact, and we categorized the shockwaves into three main categories. They were on financial impact on the people, this is the clients, logistical because of restriction of movement, they were affected, and even operational because now we've got to adopt the new normal where staff, directors, employees of these financial institutions have to work now from home. But just to get on to the points that I had prepared for the purpose of this meeting is that the impact of COVID-19 on our clients has resulted into huge losses of jobs because most of these institutions that we regulate, their clients mostly deal with the SMEs and small businesses and so forth. So some of them have had to lose their jobs, others have had to take pay cuts, and mostly affected are three critical areas, that is aviation industry, road transport, horticulture, and the hospitality industry. So the result of that then has been the collapse of member businesses due to lack of supplies as a result of lockdowns. And most of the goods are sourced mainly from the East. And you know, we are major clients of, we normally source most of our goods from China and Eastern countries. So because there was no now travel across, then of course this business was critically affected. And therefore there was lack of cash to inject into the business. And what happened, of course, with that is it's now reduction of exports or totally freezing the export orders on horticultural products. Now, on the credit unions, of course, we call them here as SACCOs, savings and credit cooperatives. As at now, the fundamentals of these institutions appear to be very stable because, you know, we are just now beginning to sense, to feel the impact of these measures that have been instituted in order to ensure that, of course, population is protected health-wise, and other policies now have to be put in place to be able to address those challenges. However, there are clear signals that COVID-19 will adversely affect the performance of these credit unions generally in coming days, into the next future, and even the far off future. But we are analyzing data to be able to fully understand basically what is going to be the real impact. Now, in terms of prudential compliance from these institutions, now it has been varying from one institution to another based on the multiplicity of factors. And some of the factors include, one is a reduction in liquidity. So some of the SACCOs have experienced severe liquidity challenges where members are coming now to withdraw their savings to be able to cater to their immediate needs. Given that now they are not going to jobs, they are not going to work, they do not have a steady income from elsewhere. So whatever savings that they had, of course, now we are seeing them coming for those savings. Again, we are seeing decline in loan repayments. And we are seeing now these credit unions, they are now restructuring their loans in order to ensure that they remain stable even after the COVID-19 comes to a close. Now, for commercial banks, again, which intermediate between the SACCOs and clients, where, of course, SACCOs in this market, they do not have the lender of the last resort. And so we do not have a central liquidity system where we can be able to access the financial system. We have to use the commercial banks for us to reach the Reserve Bank. So we are seeing these banks are going slow in lending to SACCOs and SMEs because they're also trying to study how the market unfolds going forward. And the fourth issue, again, we are seeing decline in the balance of gross loans, which from the records that we have gone down from about 4.3 billion US dollars to around 4.2 in May. That is from January. When you compare with the May, we're seeing from 4.3 to something like 4.2. And that is quite colossal for a smaller economy. We are also seeing an increased non-performing loans ratio. Initially from January, we had a non-performing loan ratio of about 8.8%. Now it's gone up to 9.8. That is a huge gap of 1% in May. The other thing that we are seeing again is also slow growth in member deposits. And finally, we are seeing increase in the number of SACCOs non-compliant with the capital adequacy requirements as a result of reduced earnings and the required provisions. So immediately, this is what we are seeing happening, and we keep monitoring this information in terms of a daily basis so that we can be able to develop intervention mechanisms that are going to enable these institutions to stay afloat.
Thank you. Thank you, John, for that, for highlighting the challenges. And indeed, with every passing day, I think the situation is getting more and more scary, which I think is also mentioned in one of the questions in the chat, which will come to later. Thanks, John. Maybe I now turn to Andrée from FINCA, because you also have been in the forefront. So if you can give us some idea about what you have seen and what has been your experience.
Les mesures que vous avez prises.
I'd be delighted to. Thank you so much, first of all, for inviting us as a practitioner to share what we are seeing. So very quickly to set the stage, FINCA operates in 20 countries around the world. We are in the Latin America, Africa, Eurasia, and Middle East and South Asia regions, so quite a broad footprint, which has allowed us to see firsthand the effect of this pandemic across all of those economies. Just to set the expectations, we have over 2 million clients around the world. The average annual income of our client base is just over $3,000. And obviously that's skewed towards lower amounts in some regions and higher amounts in others. But on average, we really do focus on individuals who are not really formal sector, who have small businesses, as we were talking about. So, you know, there are 3 elements, I think, that we all need to be focused on. And John actually talked about the first 2. Certainly, there's the near-term liquidity. There is the longer-term capital adequacy that institutions have to resuming operations. And then there is really the resilience of the clients and whether or not they have the appetite to continue operations right now and the capacity to continue to repay their loans. So from the liquidity perspective, what we as a practitioner have seen is that there has been, in the near term, a lot of collective action around trying to help microfinance institutions preserve their near-term liquidity trajectory. And so the MIVs have been very collaborative. There have been a lot of handshake agreements to reach restructurings, to give a window so that in the event that operations are unable to operate, at least those institutions do not go into default in the very near term. And that's great. The bigger question is those institutions also are going to be under financial pressure as we move forward. And so their appetite and interest in funding future liquidity needs needs to be very carefully considered. And so I don't think that we are out of the woods there. And when you look at, CGAP has done this fantastic pulse survey. I'm assuming that everyone on this phone call is aware of that. And Denise, you'll probably speak about it more. But in the near term, what that data shows is that a lot of microfinance institutions do have a lot of liquidity. But it's uncertain whether that liquidity is really just because they've stopped lending or are unable to lend and are therefore collecting or not. And so it's a big concern. The second is obviously the capital, because you know, we know that already the portfolio across the FINCA network has declined in absolute terms by 12% since the beginning of the year. My expectation is that we will probably end the year 20% below what we had anticipated, if we're lucky. Part of that, of course, was voluntary in the first stage because we wanted to make sure that we understood what was happening with COVID and what the impact on our clients would be. But as Scott will share the data with you, part of it is also related to the clients' reaction to the COVID crisis, whether it's an imposed shutdown or actually because they're concerned about their own capacity to repay credit in the future. And so that will have a negative effect, obviously, on profitability, which will, along with the impairments that we expect out of the restructured portfolio, you know, have a pretty significant impact on capital adequacy. And so that obviously is the next worry bead that we all have. Many institutions like FINCA impact you know, we don't know if those investors will have the capacity to inject significantly more. But I think the fundamental question is, historically, microfinance has always been one of the more resilient financial sectors, because our clients have such small businesses that actually they're able to stop and restart them really quickly. They pivot really rapidly, as Margarita said, to other businesses, and those lines are able to take off relatively quickly. But what we are seeing in the data right now that we are collecting from our clients is that they are at the moment facing massive food insecurity in a lot of places. In the urban areas, you know, we serve a high proportion of retail businesses that have been shut down, and the appetite for credit is dampened. So I'll hand it over to Scott to dig into the data, because I think that's what everyone's here for, and then we can come back if there are any specific questions.
Sure.
Thank you, Andrée. Can you guys hear me?
Yes, Scott.
Great, thank you. Well, I'm very happy for this opportunity to enrich the conversation with data from a global microfinance customer survey that FINCA has compiled by conducting more than 8,000 interviews of its clients from 10 countries around the world. We're also very happy to be collaborating with the Social Performance Task Force and 60 Decibels to expand this effort, which is now unfolding in 23 countries. And the total data set encompasses 14,000 respondents and is growing every day. So for the purposes of today's discussion, I'm just going to share a couple of quick headlines from the FINCA portion of that data. I want to say just a few words quickly about the nature of the data, because these are interviews that were conducted directly by microfinance institutions using their own staff, normally through a call center. And we're aware of some limitations arising from the fact that we're using the MFI client base, which means that any generalizations to the population, of course, need to be approached with real caution. However, by virtue of the client base that they serve, FINCA and other MFIs have a direct and relevant vantage point on the grassroots economy, because we are directly hardwired into the productive lives of small and mostly informal businesses, as Andrée was pointing out. And these very businesses are the ones that are most likely to be overlooked in policy, but which sustain the livelihoods and consumptions of poor families at the bottom of the financial system. I would also point out that because of the relationship between the client and the microfinance organization, we were able to quickly get into the field. In fact, as early as March,
fait des enquêtes en début de mars.
Basic understanding of the situation. And with the efficiency of our call centers, these interviews have been going on throughout the crisis, and some of the data I will present is from as recent as last month, and we're able to see some time series and trends. So while it might not have the same cachet as a highly priced research firm, the very fact of this data represents enormous efforts undertaken by microfinance organizations themselves, and the importance that they place on being in touch with their customers. So this kind of data collection should be strongly encouraged by everyone on this call for a variety of reasons, not the least of which is that we are able today to share with you one of the largest up-to-date cross-country data sets on the economic impact of COVID on MFI customers in the world, and it's one that is growing every day. So I'm just going to fly quickly through a couple of headlines here. I will mention that FINCA Impact Finance is hosting a global public webinar on Thursday, this coming Thursday, and all of you are welcome to participate if you'd like a more in-depth briefing. We have a lot of information to share. Again, we're just going to do a few headlines here. So just look for the FINCA at the FINCA websites or the Social Performance Task Force websites. You can find information, and perhaps the organizers of this panel might be willing to share that as well, the registration. Anyway, so let's get into the data here. So one of the advantages of getting into the field early is that we were able to estimate the dimensions of the humanitarian crisis that Andrée was talking about, especially in the first stage of lockdowns. So over a third of our global customers mentioned that they were reducing the number of daily meals and filling in gaps with savings and borrowing from friends. The reach of humanitarian support has been extremely limited, with only 14% of women and 9% of men reporting that they had received any kind of food assistance from the government or NGOs. And while we looked through all the data for any kind of meaningful gender differences, we didn't often find them, but one that did arise very clearly in this stage of the crisis is that female respondents are more attuned to the food security issues in their households, and they are significantly more likely to report strategies such as skipping meals and borrowing food. Okay, if you could go ahead. Thank you. Okay, I have a few more slides, but I might have used more of my time than I intended. So let me just go quickly. We'll zoom in on a headline that I'm sure will be of great interest to this group. Of course, we wanted to find out how clients felt about their ability to repay their loans, and in particular, their confidence that they would be able to meet their financial obligations. Now, remember that this is the client's own estimation, and it's possible that they would not want to convey a negative picture to their lender. So I would take this as kind of an aspirational picture, but what's happening at the top of the graph is where the story really is. And you can see that at the beginning of the crisis, 44% of borrowers were confident that they could repay their loans. There was kind of this, initial surge of optimism, though possibly with some delays. And what we've seen over time in the last couple of months is that that number has actually declined over time, and it now stands at just under a third. In other words, confidence is in shorter supply among the client base. And by contrast, the percentage of customers who were not certain but hopeful that they would repay on time or with some delays has actually more than doubled. And so what we're seeing is that there's a switch from this switch to people who are probably going to be able to repay their loans is actually made up of people who previously were definite and certain that they were going to be able to repay their loans on time. And so there's kind of a softening of the consumer's perspective. And I think at the beginning of this session, there was talk about sort of switching out of crisis into recovery mode. I think that's a premature way of framing the issue, at least from the customer's perspective, because the crisis as such is still very much unfolding from their perspective and is likely to be doing so for some time. So let's just see if we can get through one or two more here, and then I'll hand it over. I won't pause here too long, but just long enough to point out that in the terms of the same question about people's likeliness of repaying their loans, there's some interesting regional and gender differences in the indicator. So we see a lot more optimism in Africa and much lower levels of optimism in places like Africa, Eurasia, and Mesa. And we also see that women are a little bit more uncertain than men. If you could go to the next slide, I think I can get through these last two really quickly. So now we're starting to drill down, and again, due to time limitations, I'll just mention the headline, which is that the business impact, either as total shutdowns or reductions in turnover, have some observable variances between sectors and regions. The services sector, of course, which is on one hand so resilient, but also so sensitive to these kinds of lockdowns, came to a complete halt. And on the other extreme, and this is, I think, a really interesting point for reflection, agriculture was largely able to continue, but with some reductions in sales. And we really see the importance of agriculture as a resource that enhances the resilience of the MFI borrower. And, while some of us may be conditioned to think of smallholder farmers as incredibly vulnerable, especially to things like bad weather or what have you, we can see in this kind of situation how important agriculture is as a stabilizer of consumption and something we should be looking to enhance during the post-crisis recovery. So one last slide, if you give me one more minute. I'll just end on, I suppose this is a bit of bad news, which I already alluded to, which is that the worldwide concern about coronavirus is actually increasing, and significantly so. It's not decreasing. Even as the worst forms of the lockdowns are being released, and if as economists you're worried about, the mood of the public, then we have an important issue here, which is suggests that we're actually a long way from anything approaching normalcy. Borrowers themselves are the ones who see that most clearly. And while about a third of people thought it wasn't a big deal at the beginning of the crisis, at this point, virtually nobody holds that opinion anymore. And a good portion of people who were previously somewhat concerned have actually ratcheted up to very concerned. And fully 3/4 of people describe themselves in that way, which is a 4-fold increase just in the last couple of months. So I suppose that's a good place to stop, because maybe by now you're feeling very concerned yourself, and perhaps the next panelist can offer something to lift our spirits.
Thank you. Thank you, Scott. Can you hear me?
Yes, I can. Thank you.
Okay.
Sorry.
No, thank you, Scott. Thank you, Andrée. I think that's very interesting data for us, and I'm sure we can spend a lot of time in discussing each one of those slides. If you have any researches that you want to share, please do post the links in the chat so that people can get into those details or connect with you later. But moving on, I think let's hear from CGAP. I think a lot of data coming in, but Denise, what we would like you to bring to this forum is, of course, a global perspective. And CGAP has been collecting data and has already released a couple of publications. So can you share with us, Denise, on what has been, what is your take on the global scenario right now?
Sorry, thank you. Thanks for inviting CGAP to participate. We're being quite active since the crisis started on both the survey side, on the research side, not only with the post survey, but also CGAP is doing some research with low-income households to look at the impact of the crisis. So it's very interesting to see actually the results from FINCA. But I am particularly more involved with the regulatory and policy work. So I'll talk a little bit more about that too. On the data that is coming, so I did put the link on the chat for the post survey that Andrée mentioned. This is a survey that is done every 2 weeks. So it's interesting data, but just remember that this is self-reported. So this is data where people, they input the data on a mobile phone, most likely, and there is no really request to be super exact. So it's really a post survey to see how people are faring the crisis. And the data so far has showed, it just confirms what we are hearing from FINCA and also from the regulators, that of course there are some clouds in the sky, but not yet the full-fledged storm. This is quite relevant, but as Scott said, so we are still in the middle of the crisis, and it's very important for regulators to realize that. I think in the beginning, the three sides, clients, the microfinance providers, and also the regulators, we all thought that the crisis would pass within 3 months. That is even showed by the duration of the moratoria that were declared in many countries, and even in the developed countries. But it's beginning to be more clear that the crisis might be longer than we thought in the beginning. So we have seen a range of responses from regulators, but also from the policymakers in countries, both developing and developed economies. So they are quite similar, and they basically refer to 5 things. first, the measures that were taken to enable microfinance providers to continue to operate during the lockdowns. Second, the relief that were provided to microfinance clients, both from a policy level with fiscal measures such as cash transfers, but also from debt relief measures such as the moratoria or restructuring of the loans under special rules, under special prudential rules. Also, the prudential measures to make additional liquidity available for microfinance providers, but also not only the prudential measures, but we also saw some measures that were addressing directly the microfinance providers by, for example, giving credit guarantee schemes or including microfinance providers in central bank liquidity schemes. And we have seen a lot of changes in supervision. So supervisors really adapting as the crisis started, in adapting their programs, in being more flexible towards compliance of prudential requirements. So there is a lot of adaptation going on in terms of supervision at the same time that supervisors have been trying to really keep up to date as much as possible with the situation of their regulated providers by, for example, some of them, actually many of them, increasing reporting requirements on only a few specific areas, such as the portfolio that has been put on under suspension or the restructured portfolio. So you probably know we did a paper on the regulatory responses, but thinking more about the future, we are issuing a new paper on the principles for these measures. So we're thinking about, of course, it's very important to give immediate relief to clients. We are all worried about the most vulnerable, but we also want to protect the microfinance sector itself. So it's very important that measures do take that into consideration and that you combine different types of measures. So if it from one side, our regulators are actually either requiring or recognizing the reality that loans are being suspended, loan payments are being suspended or restructured, there must be some type of support from another way, such as credit guarantee schemes, other types of liquidity instruments. One example that I can think of, for example, that is not focused only on commercial banks, that most responses have been from the commercial banking side, and the non-bank microfinance providers have been more kind of in a second level of regulatory responses, is the Bank of Uganda that has, for example, extended a liquidity facility to non-bank microfinance provider. So these types of balances between providing relief to the borrowers at the same time trying to protect the safety and soundness of the sector, it's very important to think about that. So I may stop around here because I have been taking too much time. I can answer more questions, and specifically on the principles or examples from countries, I'm happy to elaborate more. Thank you.
Sure. Thank you, Denise. I think, yeah, a lot of good insights, and I can see a lot more questions, no doubt, coming in. Maybe we take a couple of questions because that's important that they come from the audience. So maybe my first question is to John, and we have a question for you. Can you please elaborate on some of the measures that the SACCOs are taking? Because you mentioned a lot on the challenges they're facing. So, and of course, you also talked about restructuring. So some more details on the measures taken by the SACCOs.
All right, thank you. There are several measures, of course, that the SACCOs themselves are put in place to be able to deal with the economic shock that they've already experienced arising from some of the factors that you have mentioned, and my colleagues, okay, who have already discussed some of these measures. And what we did as a prudential regulator, we provided guides or guidelines on how they need to deal with their clients, so that then, of course, the question of safety and the stability of the institution is protected going forward, because as it is currently, the national government is not providing direct support to these institutions. It's providing a stimulus package to individual SMEs, which is very generalized, and of course, members of the society who are mostly vulnerable. And so there being no immediate support or direct support from government through probably central bank or national treasury, then SACCOs need, of course, to be diligent in the way they deal with their fundamentals to ensure that they exist even after the end of COVID-19. So first is that we are seeing there's a shift in savings, from savings to consumption. And of course, that dependency on government in terms of support being there. But first and foremost is that these SACCOs have had to strengthen their delivery channels. And so adoption of IT has been very critical, and ensuring that they are coping with the new normal of many or majority of their staff members now working from home. That has already been put in place, and the revamping their IT systems has been very critical. And because without that, definitely is difficult for them to be able to ensure there is a continuity of business even after the dying down, a reduction of COVID-19 challenges. But one of the challenges, one of the key things they have put, and these are the strategies that SACCOs have adopted to limit further deterioration in loan quality, is restriction on new loans to limit exposure. So that has been critical. And generally, we are calling this liquidity and portfolio quality. Ensuring that liquidity and portfolio quality is good has been key. So restructuring of existing credit facilities, where now it is on individual members, based on every client, they need to come and negotiate and indicate that as an individual client, this is what I'm doing. I'm either in aviation industry. My SACCO is what we call a private school based, because schools have closed down, except the government or public sector schools. The private sector schools are closed down, so there is total loss of employment there, and also total loss of income. And so that they have to restructure the existing credit facilities to ensure there is a quality of the portfolio that they are holding. And of course, there has been also the issue of moratorium in repayment of loans. So if you are to pay it, say for 1 year, and of course, so far, we're going into 5-6 months, then you need to agree with the client how you'll put in moratorium. Now, in terms of addressing the customer needs, we discussing about rolling out new products which are technologically driven to address the challenges of physical integration occasioned, of course, by the pandemic. So the products that now they are rolling out, they have to consider the question of social distancing to ensure that clients do not walk into the banking halls. And so they've got to bring in now the question of technology. How robust is your IT system? What kind of products can it support? Can a member from the comfort of their houses, their places where they live, then be able to access the credit facilities from the SACCO? And how safe? What are the security features that have been put in place, of course, to ensure the cyber security question has been taken into consideration? Secondly, loan restructuring. Again, that becomes critical, and that I've already previously mentioned, that they will need to discuss with every individual client, depending on how the sector has been affected, whether it is agricultural sector, whether it is aviation sector, and so forth. Then, of course, lowering the cost of transaction and mobile payments. There has been a concerted effort, a combined effort between ourselves as a prudential regulator for SACCOs, together with the central bank and the main telco, that is Safaricom, to ensure at least there is a limit up to 1,000 Kenya shillings. Anybody sending or accessing about 1,000 shillings, that's be about $10. There is no payment. It's free of charge. So that effort is already in place to lower the cost of transaction on mobile payments. And of course, fourthly, social assistance contributing in cooperative COVID-19 response team. So we've created what we call a sectoral approach to help the most vulnerable members within the cooperative sector, because cooperatives in Kenya are organized such a way that they are both financial cooperatives and non-financial cooperatives. Financial cooperatives being the SACCOs and non-financial cooperatives being the housing cooperative, no, sorry, not housing, but agricultural-based cooperatives, that is dairy, livestock, fisheries, cooperative, and so forth. So we've come together and formed a team, and so we've been able to raise finances to support the most vulnerable, especially those that have been affected, the sectors that I just mentioned. So we are addressing that. But now in terms of regulatory and policy intervention, this has become very critical in order to ensure that there is a continuation of business. So what we have done is that we have provided guidelines on how annual general meetings are to be held. So we've already postponed all the annual general meetings that are required to approve, say, payment of dividends, rebates to members, and so forth, and where critical decisions are taken. And this is keeping with complying with the government requirement that, of course, no huge gatherings that need to be there. Of course, the reduction in income and the corporate tax. The government has already given us this, and of course, we are very grateful that value-added tax has come down, other corporation tax has come down to a greater degree to assist, of course, this institution to be able to cope. And of course, reduction in bank rates for the few SACCOs that are able to borrow from banks, although currently they are not borrowing. But for those few that are going to borrow, of course, the reduction in bank rates has been put in place. The other bit in terms of regulatory and policy intervention has been partnership with the mobile transactions, sharing the cost obligation to make it cheaper for end consumer, removal of cost in transactions, which are less than $10 that I've already alluded to. And of course, apart from postponement of annual general meetings, we are saying now they can be able to come up with a mechanism to hold virtual meetings, just like the way we are doing it. And so this will be considered in order to make very critical decisions, including like appointing auditors to be able to audit their books, making critical decisions where we know members would be really affected when they meet. Finally, of course, is key question of gender consideration. And has already been alluded, of course, by CGAP team. Women and youth are the most affected, since majority of them are in SMEs, businesses which have been severely affected. And we feel that there should be an efficient and convenient ways of accessing funds, so that then, of course, these mostly affected segments of the society are taken into consideration. And of course, finally, generally government is taking some intervention measures and providing support mechanism to those individuals at that individual level, not at the SACCO level. Thank you very much.
Thank you, John. A lot of good points in there, and thanks for touching on those. If I may take the question on the pricing, because it talks also about digitization and lowering of costs, which John mentioned from the regulatory perspective. Maybe if I can go back to Andrée and talk from the implementer side, how are you dealing with the concerns of customers on the MF price in terms of pricing? What parameters would you be using? Yeah.
Thank you. So I think it's very important to be super clear on this point that pricing has been a concern and an issue in this space for a very, very long time. And actually, clearly, it's a major pain point for our clients. I don't know that that has changed very much. FINCA has been on a journey, as many of you all know, as many other institutions have been over the last several years, to really leverage technology to improve the efficiency of our operations. And I think that a lot of microfinance institutions face very similar challenges. On the one hand, we've seen that not all of the pure digital plays have really the kinds of results that we want to see in terms of the social impact. And there's been an awful lot of research on the levels of over-indebtedness when you get far away from the client. Inherently, microfinance has always had a higher cost associated with the delivery model, as you all know, because of that social connection that's really critical. But it has to come down. And so we have to figure out how to integrate that technology, which unfortunately in many cases, as you all know, requires investment. And so it's going to be really interesting over the next couple of years, honestly, I think. We see that there is an opportunity to leverage this crisis to push through some changes that, you know, we can really leverage our call centers much faster. Scott mentioned that. That really reduces the expense associated with serving clients. On the other hand, you know, the lack of national IDs in a lot of countries, and the fact that people switch cell phones so rapidly on their SIM cards makes that complicated to move to 100%. And so microfinance institutions, particularly the regulated ones, take their mandate very seriously and have been cautious about moving too quickly. But under this current pandemic crisis, we're going to have to move fast. And I think that's where the partnership with the regulators and understanding some of those risks is going to be really key.
Thank you, Andrée.
Andrée, could I just add one quick point to that?
Yeah.
From the data perspective. Yeah, if you bear with me for just 2 minutes. But I think also in the near term, there's a very immediate pricing question on customers' minds, which is tied up with the whole restructuring effort, because, you know, clients are most immediately concerned about just being able to meet their obligations, right? They don't want to fall afoul of the lenders that they depend on. And so it's very important to them to keep the overall payment manageable. However, people do know that restructuring comes at a cost, right? They know that they're going to be charged interest, for example, for the periods that they were not actually able to do any work. And we did see in our data, you know, that clients are asking for, you know, interest holidays, for example, during the period of the lockdown, you know, and they say, hey, you know, this happened to everybody, and they don't want to be the ones paying the price at the end of the day for our, you know, for our kind of, not our mistakes, but for the situation that we're in. And so I think this question of, like, as we restructure, how do we treat clients with the utmost fairness and reasonableness in the way we handle the interest payments on those restructured loans, I think is an extremely important and immediate question that, you know, is going to require agreement, not just between the MFI and its clients, but also with, you know, our funders. You know, all of us have to be, sure. We have to have be of one mind. Yes, yeah. Thank you.
Thank you, thank you, Scott. Since we talked about multiple kind of interventions that's been taken, and we talked about clients in general, but specifically when we talk of microfinance, we definitely want to talk about women being 95% of the clients. So maybe if I can go to Margarita, and if you could share with us in terms of all the interventions that have been taken, what are specific steps that you think has been taken or should be taken, particularly to support the women microfinance borrowers, individuals or enterprises?
Thank you. So I don't want to say again all the things that are already said. So I just want to make a point, because we know that all the people are affected for the crisis, but there is some little groups that are more affected or critically affected. And we think in Ecuador, women are in this group. So COVID-19 crisis had generated a disruption in economic and social dynamics, increasing the gaps that already existed. And the risks are higher for micro-entrepreneurial women, the business segment, as well as the informal sector, because the income generation reduction by social confinement measures affect direct this group. So it's necessary to highlight the 4 dimensions of financial inclusion, so access, use, quality, and its impact of financial well-being, of health. And I need to talk about financial inclusion, but because we know that when we talk about financial inclusion, we talk about something in the long term, but some measures for financial inclusion are really a key to help us now. Because in this particular crisis that we are living, we have to see the problem, size the problem, understand the problem, and then generate something to help the people. And I think if we have problems now in some dimensions, these problems come because we have financial exclusion, and women are particularly in this group that are excluded. So this crisis demands additional effort to reach benefits, the benefit of government grants. Many of women are informal working women, and the challenge is that these subsidies are made through electronic transfers, so that minimize face-to-face contact and the exchange of cash, reducing the risk of contagion. So another challenge when we think about women is the realization of a regulatory framework that encourages the strength of alliance with fintech that seek payment solutions and facilities the expansion of access to women to financial products and services. But we understand clearly that technology in women have not, maybe it's not the best combination in some places or in some of the economy, but we are really convinced that if we win expansion of access for women in financial products and services, we can do a lot for this group. So financial capacity measurement carried out of the region show that women have a different financial behavior profile than a men, so they have less confidence in financial matters and more risk aversion. They have different strategies to deal with extreme situations. For example, women tend to cut expenses and men prefer to will extra money. And they are more prone to saving informal mechanisms. So regulators must consider this difference when excluding new policies and seek inclusion. So we have to focus financial education problems to these programs to provide solutions to need in the short and long term. We have financial education programs that allow women who are beneficiaries of money transfers to make adequate use of the resources received with financial welfare in mind. So it's important to get access to financial products and to clearly say to women what that means. And they have to learn about, you have to use these resources. So another thing that is important is that in Ecuador, so the superintendents that control cooperatives, so financial cooperatives and non-financial cooperatives. And we have in non-financial cooperatives a lot of institutions that are for women who need to work each day to become a daily income for the families. So it's really important for us to connect financial cooperatives with non-financial cooperatives in such a way that they find the right solution for these needs. gender analysis of financial integrity, credit conditions more flexible, or the increase of availability of resources for women, and generate financial products to pay debts for women that have an enforced regulated financial sector. So they have to pay this credit and became a new one to the possibility to get better. So promote the group of micro debt loans and programs to support the productive initiatives of low-income women. Thank you.
Okay. Thanks. Thank you, Margarita. I think that's a fantastic intervention there. One thing which emerges out of this discussion is we are talking about microfinance institutions, the clients, we are talking of digitization, we're talking of various people, and because the pandemic has not created only economic, but also social and other crises. So my question to Denise, because I think you have the global overview there, what would your suggestion be in terms of collaboration? How do you think regulators, microfinance players, other stakeholders in the ecosystem collaborate to keeping the interest of the microfinance clients in mind?
Thank you. As Alfred pointed out in the beginning, in a way or another, we need to look at crisis, not only this one, as an opportunity to address issues that have been long-standing in the industry. So we have seen as CGAP in our work with the regulators, in our conversations with them, and what they think the future of microfinance, the regulated microfinance sector will be. Of course, they all come with digitization as a first response, but digitization will not deal with this crisis, right? It will deal with the next one. So it's on that point, it's very important to be really encouraging and also supporting the industry to go that way. I think everybody would agree that greater digitization will be best for everybody. It will probably increase the resilience of the industry in the long term. So addressing the regulatory obstacles for that is very important. The one big issue that affects microfinance, regulated microfinance provider, and also the unregulated ones, is the fragmentation of the regulatory framework. So we see fragmentation in terms of quality of supervision, quality of regulation, the level playing field. So we see sometimes very large deposit-taking microfinance institutions with barely a minimal level of supervision and also standards for conduct of business. And then in the same country or in the neighbor country, we see very small institutions with a regulatory burden that is really next to the burden that is imposed on banks. So I think collaboration on those issues, and especially international collaboration for peer learning, and I would say that AFI would be really the best platform for that. Where do regulators want to see the microfinance industry in the future? So issues such as how to encourage and how to foster digitization, but also how to foster greater and better management at microfinance institutions, regulated ones, and how to bring the large unregulated ones under the same playing field of the regulated ones. And then last point, I would support the points on gender specific data. I think it's very important to have better data overall. And of course, granular data for supervisors, regulators, and of course, the institutions already have their granular data, but an analysis of that at a sector level would be very important for policymakers, regulators, and supervisors to understand how and why to go certain ways with the industry. So collaboration with the industry to get that data, to gather quality data in a better way, more timely way, will be very, very important. Okay, one last point. Also, one very difficult thing with this crisis is, of course, we're still in the middle of the crisis and we all want support to microfinance institutions, it would be very difficult at this point to for the supervisors to differentiate those microfinance providers who actually deserve support from those who were weak and maybe would not even survive a very small crisis. So they are not all the same. So that's the job of the supervisors, to try to differentiate those who will actually be supporting the clients in the long run and deserve support now, liquidity, regulatory forbearance, whatever measures, from those who do not. Thanks.
Thank you, Denise. Of course, it's so interesting to hear all of it, and I can see a lot of questions also coming into the chat. Let's look at a couple of questions that we have here. Let's take the question from Fatou, who's asking, and maybe Andrée, if you can help me respond to this. Would group lending be very effective as for this COVID, noting that women are differently affected differently, but they have to assume joint liability?
Trying to unmute. Okay, I'm unmuted. Yeah, I think that that notion of joint liability is probably going to be really critical as businesses start to restart. But you know, fundamentally, we think that the groups are there really to support each other, as you know, obviously, as everybody knows, as they're trying to rebuild their businesses. So I do think that there will be a key aspect of it. From a data perspective, Scott, I don't think that you've differentiated between the group loans feedback and the non, and so I don't have that level of granularity yet. But I'm really happy to report back out on it as we go through that assessment. I also just wanted to piggyback on something that Daniela said in terms of what we can do. I think, you know, we're really grateful that you invited us to participate in this forum. I think the more information that we can share collectively to develop that common perspective, the better off we're going to be. You know, microfinance institutions are fundamentally in this business to try and really help people build their financial health. And there's a collective interest that supersedes individual institutional interests that we're very committed to.
Thanks, Andrée. Very well put there. Let's take one more question, which is again on the digital channels. What measures have been taken to encourage MFIs, especially NGOs in rural areas, to use digital channels? Denise, would you want to take this? Any inputs from your research?
We do have a range of examples of measures to encourage digital channels, and actually I think John has mentioned a few. So, but I don't remember of any that were specifically targeting NGOs or even NGOs in rural settings. So I don't remember any of the other measures that I have collected, and part of them are actually in the AFI data sets that you are collecting the you know, the tracker of measures. Mm-hmm. We see in Egypt, India, Kenya, Nigeria, Pakistan, Peru, Russia, various measures from relaxing requirements on agent onboarding to getting to an agreement with the mobile money industry to actually waive fees or waive fees on bank transfers. These are the most common ones, but I haven't remembered, I don't remember anything specific to NGOs in rural areas.
Thanks, Denise. Of course, yeah, John definitely earlier mentioned very specific interventions in there. Thank you so much. I think we need to wrap up. I hope we have answered all the questions. I think to Tati, if you can help bring up what we'll do is we'll take some feedback also from the audience. I already see a lot. We can come up with the last question that we had, which was on understanding what are some of the talking of the collaboration, because I think that would be the biggest takeaway. So Tat, if you can bring out the question on the collaboration, on how do we bring, because if I were to summarize right now, I think what is coming up again is one, the need for data, because data would help us take informed decisions. Maybe before I summarize, just to help you here. So if I may request all the audience to go to menti.com and use the code 976209. And if you can respond to some of send some of your responses to this question on how regulators, microfinance players, and stakeholders can collaborate, because that, of course, is one of the key objectives of this webinar that we're having. So if you go to menti.com using any gadget and with the code 976209. And while you send in your responses, let me use the time to summarize our discussion. So as I was mentioning, so I think one thing what comes out is the need for data, because this is an evolving situation. And I think as Scott mentioned in one of his slides in the last slide, that, you know, the situation is still worsening while we are hoping it's getting better. So, and as the situation changes, there is still a lot more data that is required to make informed policy planning. Second, I think we have talked about reducing consumption and how it's affecting the savings that the people have saved up. We have talked about the need for more digitization. That's an area that AFI has been working very closely with. And digitization, not only for effective and secured transactions, but right now also to expedite to reach the corners, and also to lower the cost, because pricing is a very key factor, particularly when people are going through a crisis, and digitization, I think, has some of the answers to that. Thanks also to the panelists for sharing a lot of the gender perspectives, because we have 95% of the microfinance clients as women members, and this whole process of working with microfinance is incomplete without designing any policy intervention or designing microfinance products or any intervention at the ground level without keeping the women in mind. And of course, thanks again also to Denise for mentioning that how AFI can play in a role, because what we are realizing that as we collected the data using the tracker, we realized that this is definitely something that is there for here to stay. I think because there are a lot of impact, which is not only for now, but a lot of post-COVID impact, and the situation will take even longer to settle down. So I think we have raised some very important policy question on on COVID-19, the impact of COVID-19 on responsible borrowing, on the post and the management, the debt management post-crisis. So I think we hope that this seminar has brought out some very key points on the need for stakeholder collaboration and how we can bring it together. Thank you so much for sharing all the links also to the reports. I think with time, more and more research and data is coming out. Thanks to Scott and Andrée for sharing some very important data in there. Thank you, Margarita and John, for bringing in the regulator perspective, and for Denise for again sharing the global information. We do have some thoughts coming in from the audience, and I think thank you also to the audience for coming in with some very good questions, and also for some of the responses that we see there. Thank you so much. I think this is a very important step here for AFI, because we also start recognizing the role that AFI can play in bringing together the various stakeholders, not only for regulators, but also the other stakeholders in the ecosystem that can help address the problem together. So let's look at some of those responses that are coming up there. And also, if you want to, feel free to also respond to some of the questions that or comments that might be there in the chat. So thank you so much for your presentations, for your sharing, and hope we together are able to address the crisis, the various aspects of that the pandemic has brought upon us. Thank you so much.